So in a moment, guys, I'm going to show you exactly how you can trade cryptocurrency futures. So trading crypto with leverage, of course, safely and responsibly. We're going to talk about that in this video, but I'm going to show you how you can do it from literally anywhere in the world. We're going to go over to my computer in a minute, and I'm going to record this very informative tutorial for you. It's going to have chapters down below. The crypto trading exchange I'm referring to is called Bitflex, an amazing crypto trading platform, super easy to use. Anyway, without any further delay, let's just get straight into it.
Okay, so getting set up with Bitflex is a breeze. Literally, it takes less than a minute, maybe even 30 seconds. I actually am not sponsored by Bitflex for making this video by any means, but I am an affiliated partner. I love using Bitflex and therefore I joined their program. And if you'd like to take advantage of using my link, which is in the video description down below, you'll be able to get a huge bonus. By clicking that link, you'll see yours truly there, and you can see the progressive bonus structure, which actually allows up to $50,000 in bonus. You do need to deposit and trade quite a bit to get that, but don't worry, there's a progressive structure. So even if you deposited as little as $100 or $200-300, you'll be able to get a very nice bonus as well, and discounted trading fees. Then what you'll need to do is on this page, scroll down to where it says sign up via Alex Marzel's referral link, and you'll be able to sign up here. You can see referral code. Just make sure that XW capital NT capital A 8 is in the referral code, and that way you'll be able to take advantage of that bonus when you sign up. You can sign up literally with just an email address and you're good to go. So now signed up with Bitflex, what you're going to want to do, of course, deposit some cryptocurrency into your Bitflex trading account. So if you already have cryptocurrency, you can do the following. And don't worry, if you don't have cryptocurrency already, I'm going to show you exactly how you can easily buy some crypto and deposit it to your Bitflex account. Let's say you had cryptocurrency already. You can simply go to assets. You can press deposit. When you press deposit, depending on what the cryptocurrency you have is, select it here. I suggest having it in USDT before you transferring it in, or maybe one of the bigger ones like Bitcoin or Ethereum. So let's say, for example, you wanted to deposit Bitcoin. You make sure that Bitcoin is selected, and you can simply use the QR code from the wallet you're sending from, or you can copy the deposit wallet address. Just make sure that, again, the coin is the correct one that you're transferring from, and then you can easily deposit cryptocurrency into your Bitflex account. However, let's say you didn't have crypto already and you wanted to deposit money, cryptocurrency, into your Bitflex account so you could trade. Well, at the time of recording, Bitflex doesn't have an on-ramp service like this. Now, there's also benefits to that because they don't ask for KYC. However, if you want to buy some crypto, or if you don't have a place where you can buy crypto already, my recommendation is a website and one of the biggest crypto exchanges called Kraken. The reason I don't suggest necessarily to trade on Kraken is because their futures trading options aren't so good, and it's just a whole different process. No matter where you are in the world, Bitflex can actually allow you to trade futures, and that's where the real money to be made is, providing, of course, you're using correct money management, risk management. More on that later in the video. So with Kraken, you can make an account quickly. You will need to do a quick level of verification to buy cryptocurrency, but good news, you can do that even if you're in the States or Canada, wherever you are in the world. And to buy cryptocurrency, you can simply go to buy Bitcoin. You can buy it with, you can add a payment method like cash or adding a card. So that's cash from a bank account or a debit card, and you can simply deposit it into your Kraken account. Really simple, really easy. Once you've deposited your money, your fiat currency, dollars, pounds, euros, into your Kraken account, and by the way, you can do this from another place like Coinbase or Binance, wherever you have an account already perhaps, but my recommendation is Kraken, link below if you want the link for Kraken. You can simply then use it to buy a cryptocurrency like USDT, which is a stable coin, or Bitcoin or Ethereum. And then once you have it, you can go to withdraw. And let's say you wanted to deposit Bitcoin into your Bitflex account. Well, all you're going to do then is basically Bitcoin network. You're going to add the Bitcoin address. So we're going to go over to Bitflex. We would copy that here. We would go over to Kraken and we could basically put that address in, save it, and then you can send your Bitcoin easily by using that wallet address. Just make sure you are using the right cryptocurrency that you're withdrawing into the one that you're depositing. Very, very important, because cryptocurrency can get lost if you're not doing it on the right chain. And withdrawing from Bitflex is also super simple. Just go to withdraw, and depending on the cryptocurrency you hold, you can simply select it, and you could select the wallet address and the amount. So for example, say you made a really nice profit, or you didn't make a profit, whatever the situation was, and you wanted to send money back to Kraken, because on Kraken you can sell it back into dollars, pounds, euros, and then put in your bank account. You would simply hit the deposit button here, and you would get your wallet address. So you would generate deposit address, you put that address into the withdrawal address on Bitflex, and you can simply send the cryptocurrency out of Bitflex into your Kraken account or your other trading account. And then if you wanted to, of course, sell that and turn that into fiat currencies, dollars, euros, or pounds. Pretty simple. If it's not, leave a comment and I'll be happy to answer. So let's look at the futures trading, as Bitflex call it, and many other exchanges call it derivatives trading. Pretty much the same thing. Now, when you first look at this screen, you might be thinking, oh, what's going on here? I see lines, I see numbers, it's all a bit confusing, and you might even want to close the video. I know that when I first looked at a trading exchange chart and its screen, it was a little bit overwhelming, but don't worry, I'm going to break this down, and actually it's really simple. And of course, remember, there are chapters down below so you can rewatch and learn as we go. So right now we're looking at Bitcoin. For example, if we traded to Ethereum, now we're looking at Ethereum. You can see that I have a position open right now, and that trade is actually currently down 4.5%. So I'm actually losing at the moment about $55 on that trade. So the first thing we're going to do here is open a trade. So over on the right hand side here, we have the opportunity to place an order. You can see I've got my assets listed here. So I have about $3,000 in this account, and I have a balance free of about $500. That's because I'm in other positions. You can select show all positions if you want to. Now, what I'm going to do here is show you the three different types of orders. Now, there's a limit order, a market order, and a conditional order. Let's run through those together. A limit order is a price that you can set that if the price comes down to that level, you will automatically enter into that trade. So right now we can see the Ethereum price, and I hope when you're watching this video, the price of Ethereum is much higher, just on a side note. But what we can see is the price is at $1,832. Let's say we only wanted to enter a trade if the price came down to $1,830. So what we would do here, we would put limit order, we could select $1,830, for example. Say we wanted to enter at $1,830. Then over here we have the opportunity to select leverage, and this is the beauty of futures trading. Now, it comes with risk, but it offers the opportunity to make great gains as well. Now, use this responsibly. Leverage is it can be your best friend or your worst enemy. I'm going to go over leverage separately in the next chapter or two. Let's just finish the orders because it needs to be explained properly so you can manage your risk. So we've got an order, one at $1,830. Your quantities here, you can easily use this slider. For example, let's say I selected 50%, that is going to open a position for 0.27 of Ethereum, which is actually going to be worth in dollar terms about $500, $494. And the reason for that is I have $500 available, but I'm using 2x. You can see the actual price in real terms is half of that because I'm using 2x. If I selected, for example, 10x, if I was to select 50% of my portfolio, you can now see that the order value is $2,415. But again, it's costing me the same amount. It's still costing me $240. So I'm having a bigger position with the same amount of money. And on Bitflex, you can go up to 100x leverage. But again, I'm going to go over leverage in a minute. For now, we're going to do a simplified one at 2x leverage, 50% of our balance. So it's costing us $247. And our trade is pretty much worth $500. And if we wanted to set a limit order, we could go open long. And what that will happen is it will put an order in our active orders ready to be filled. So if the price comes down to $1,830, that trade will get opened. But we don't want that to open for now, so you can easily just cancel it and go back to positions. Then we have market orders. Market orders allow you to get into the market immediately, which could be a really handy tool sometimes. You don't need to select the price that you want to enter at. Market will enter at the market price. Leverage, same applies. Same applies with regard to the quantity, the amount that you want to trade. And by the way, you can look at it in Ethereum or USDT. So it might be simpler even to look at it in USDT. So very easy to manage and use there. So that's market order. Conditional order is a little bit more advanced. If you are a bit more advanced, I'll explain quickly. It basically allows you to set a conditional order on the price that you want to sell at as well as buy at. So if you wanted, for example, to set a short, which is where you predict and bet on the market going down, let's say I wanted to do that at $1,843. So what I could do here, I could put the trigger price as 1843. I could set the order price as 1843. And the same applies. I could open that trade as a conditional, and it's going to go into conditional orders, and that will only enter as a short, as a long, because I did it as a long, if the price were to go up to that price that I set, which was $1,843. For now, particularly if you're a beginner to day trader or still learning, I suggest to use limit orders and market orders. They are probably the easiest and best to use. So then there's take profit orders and stop losses. Very, very important in trading. And I can use the example of the trade I have open right now. So what we have at the moment is a stop loss at $1,711. So you can put it in there, the stop loss, and press confirm. And that means if the price goes to that level, even if you're out walking the dog at the gym, sleep, it's going to take that stop loss. It's a way of you managing risk. The same applies with take profit. If it doesn't matter what you're doing, if you put in a take profit price, let's say $1,900, and it will tell you the percentages and the ROI here, you press confirm and it will go here, and you can set it and forget it. Super, super simple. Now, one of the most important things to note when day trading cryptocurrency is risk management. So touching on the take profit and stop loss, and also now going back to leverage, we need to talk about this. This is super important. Do not start trading until you fully understand this. And again, you can rewatch it in the chapters. So leverage. Leverage allows us to magnify the amount in a position from the same money. So let's say, for example, we only wanted to use $500 of our own money, and I'm hoping from the earlier part of the video, this will come a bit easier. But let's say, yeah, we wanted to use 50% of our available balance, which is $494 in this example. At 2x leverage, that means we're opening a trade for $500 using $247 of our own money. The reason we're using $247 is because we are 2x leverage and we're using 50% of our balance. Now, if I was to take this all the way to 10x, we still use, by using 50%, we're still using the same amount of our own money, but we're controlling a bigger position. It now becomes $2,474 as opposed to just the $500. And you can do this all the way up to 100x leverage. So again, going up to 50%, still around the same monies, but our order amount now becomes $22,725. So obviously, if you earn just 1% on 22,000, it's going to be a huge profit compared to just 2x or 3x. But, and there is a big but, higher leverage is higher risk. Yes, higher reward, higher risk, but using high leverage isn't recommended, at least until you fully understand how leverage works. Now, the leverage will affect what's known as the liquidation price. So at the moment, you can see that I have a liquidation price on my trade down here of $1,709, which means I want to have my stop loss hit before that liquidation price. You don't want to get liquidated because the fees are big and you end up losing a lot of money. Always protect your liquidation price with a stop loss. So in this scenario, I've got $1,711 as a stop loss, which will come before $1,709 because I've gone long. The price has to come back down to $1,711. Now, if my leverage was higher, it would mean my liquidation price is going to be much closer to the entry. And the other way that you can do this whilst you're in a trade, if you want to change leverage whilst actually in a position to free up capital or deploy more capital into a position, you can actually go to position margin. So over here, you could, for example, increase margin. So by increasing the margin, it's actually going to decrease the leverage because you're putting more capital into the trade. The leverage is going to go down. So let's say I wanted to put $250 of this $499 available. I press submit, and what that's going to do is bring that liquidation price down further from my entry, giving me more room to breathe. However, if I wanted to, let's say, free up more capital to deploy into the trade or to another trade, I could essentially do that as well, which is going to bring the liquidation price nearer to the entry. So it's higher risk, higher reward. So I could decrease margin here. Let's say I took out nearly all my amount allowed. So let's say 1,300. I could press submit, and that's going to put the liquidation price all the way up to $1,821. But my stop loss is $1,711. So I would be liquidated before. So very important not to get liquidated. So I'm going to increase my margin again. So I'm going to basically go all the way back up. I'll put $1,300, and my liquidation price is going to come back down to a comfortable level that my stop loss is way above. Now, when it comes down to actually deciding when should I buy, when should I sell, what's technical analysis? Well, I won't cover that in this video, but I do have a very good video about that. You can click the link up there in the video description below, and it's my my top strategies on how to trade cryptocurrency. I suggest you watch that video as well.